President Biden is about to begin his second year in office, but as he does, he is battling some tough economic headwinds. Kayla Tausche joins us right now with more on that front. Kayla, good morning.
Good morning, Becky. When President Biden took office, the economy jumped quickly out of the gate. Retail sales soaring after stimulus, consumer confidence spiking. And while those areas have since leveled off, the labor market has stayed strong. A jobless rate cut nearly in half to 3.9%. That's a stat cited daily by the White House. And respondents in a recent CNBC poll were largely optimistic about their own job prospects going forward. But casting a shadow on all of that strength is inflation, climbing throughout the year, dragging President Biden's approval down with it as the supply chain broke down and businesses passed higher labor costs onto consumers. So why did the White House fail to tamp it down early on? Well, administration officials acknowledged to me privately they wanted badly to put rocket fuel behind the recovery. They were too focused on vaccinations and averting worst-case depression-like economic scenarios. And there was and is a deference to the Federal Reserve on anything besides messaging about inflation. But voters say President Biden still isn't doing enough to fix it. In a CBS YouGov poll from this weekend, 63% of voters said their view of the president would improve if he did fix inflation. Just 24% say their view would improve if Mr. Biden passed his landmark social spending bill. Now, as a broader policy reset is underway, the White House still trusts that inflation will level off by the end of this year. Midterm voters may have their say before then. Becky?
Kayla, you mentioned it, administration officials pointed out their deference for the Federal Reserve, but every administration has had issues with the Federal Reserve that tries to raise rates. A lot of administrations and even presidents have blamed the Federal Reserve when those problems come along. Will that deference continue as the Federal Reserve looks to really step up rates and kind of fight this battle against inflation?
Yeah, Becky, I think it definitely will, at least until the Federal Reserve gets staffed up with all of these new nominees. The White House really doesn't want to draw too much attention to that process. They want to install those personnel quietly and let them get down to business and follow through on their own priorities and their own agenda, getting the economy in order. That being said, there's also never been a former Fed chair that heads up the Treasury, which is essentially the leading economic arm of the executive branch. And so there's been some discussion of whether that has created a new and interesting dynamic where it's led the administration to be more deferential to the Fed. And that's an issue that we're going to explore a little further.